Welcome to Senior Living Visionaries, a podcast for senior living leaders who are looking to stay ahead of the curve in the industry. On this show, we feature leaders and innovators in senior living who are pushing the boundaries and creating new, effective services and solutions. And now, let's settle in as host Jennifer Drago connects us with today's guests.
Welcome to Senior Living Visionaries, where we showcase the leaders and innovators who are shaping the future of senior living. I'm your host, Jennifer Drago, strategy consultant and CEO of Peak to Profit. And today our guest is Lisa McCracken, and she's joining us from the National Investment Center for Senior Housing and Care, also known as NIC or NIC. Lisa oversees NIC's research and analytics team, which develops actionable, data-driven insights on industry challenges and opportunities, and showcases practical examples of how organizations nationwide are embracing opportunities to meet the demands of a changing marketplace. Additionally, Lisa oversees a robust research agenda with nationally recognized partners to help the next generation of senior housing and care leaders address evolving and dramatically different consumer preferences and needs. Prior to joining NIC, Lisa served as the Director of Senior Living Research and Development with Ziegler, a leading investment bank for senior housing and care, where she oversaw research staff supporting the senior living, senior housing, and related corporate finance healthcare practices. Lisa began her career as a research analyst at Hollering Consulting and ultimately becoming their vice president of research, managing partner, and ultimately president between 2009 and 2013. She's a nationally recognized thought leader and public speaker and has been the lead researcher on a number of national research studies, such as the Leading Age Ziegler 200 and other industry-wide publications. I'm so excited to interview Lisa today. Welcome, Lisa.
Thank you, Jennifer. I appreciate being here.
Yeah, and tell us, did we adequately cover what NIC does, or do you want to add a little bit more flavor?
Yeah, so I'll just add in a little bit. We were founded in 1991, so we are a not-for-profit organization, and our mission is to enable access and choice for older adults, really through that data and analytics, and also our convening power to bring together operators, senior living organizations, and capital to the markets. And we do that a lot of different ways through our different research, whether it's NIC-led research or in partnership with some sponsored research and with some of our different groups, such as Harvard, NORC at the University of Chicago, the Milken Institute. So we've been doing what we do for a number of years and are always trying to really support the industry trends and where the puck is going, if you will, with insightful information and data behind it.
Perfect. Well, thanks so much for being here and being willing to share. I know you love to talk about the research. You're probably a data nerd like me.
I am.
But I love how you can bring such understanding to the data that you have or gather through your partner work. So let's talk quickly to begin with about middle market. NIC is one of the founders of the Forgotten Middle study. I think that was in partnership with NORC, as you mentioned. And I know that research has been updated pretty recently, maybe in the last couple of years. And so can you share some of the research findings from the updated study and tell us a little bit about the shifts that we're seeing?
Yeah, that initial study, the Forgotten Middle, that was done in 2019. I think what that did was really focused attention on that cohort and really brought some definition to it and then quantified, okay, really how big is that older adult group that we're talking about here? And I think it showed us all that there's a significant number of people that are aging out and potentially needing to access housing and services where there may be some limited options. So that was in 2019. There was an additional study in 2022, and the SCAN Foundation was part of that as well with NORC, and again, similarly looked at some of the projections with that. So we know it's a significant group of individuals that, don't have the ability for private pay, housing or care, but also don't qualify for the government subsidized support either. So we've done some subsequent studies, and there's two that I will probably comment on that have I think some recent updates, at least within the last year, in partnership with us. So one was a study and a special analysis that we did with the Harvard Joint Center for Senior Housing Studies. And they produce an annual report, Housing for Older Americans, and they've often looked at basically the cost of housing, cost of rent for older Americans in the country. Well, one of the things that they did this year that was unique to the report is they looked at what we call the sort of the dual burden of housing and care. So one of the things that they examined, particularly for those middle market older adults, and that was based on middle market, based on income, it was looking at, okay, let's compare the cost of care to stay at your home and receive home care services versus living in an assisted living community. And I think, often there's this belief, Jennifer, that, well, we can just stay in our home. We'll just access care and services in our home, and that'll be cheaper. And we know that that's not necessarily the case, and that's what their results showed, too, that really once you get above that 4-hour threshold, in many instances, and this can depend market to market, depending on the cost of housing and procuring some of those services, it's almost in some respects, in some of those markets, cheaper to move into assisted living. That being said, we also know that, so you look at that home care versus assisted living and seniors housing, one is not necessarily cheaper than other, particularly staying in your home. But at the same time, both of those options are out of reach for a significant portion or the majority of the middle income seniors. So, we're talking 13% being able to afford assisted living across most of those markets, and 14% being able to afford 4 more hours of home care. And as we know, we pay out of pocket for that. So that was one of the big things that we called attention to through that Harvard research. The other one that I want to comment on is we've really been trying to move the needle in the conversation, really from identifying the challenge and the barriers and the problems to where can we bring forth some solutions. So we've done a number of case studies, and you can find them on the NIC website around organizations that are bringing forth some middle market housing options in some creative ways, and we applaud their efforts. They've been fantastic. But to really scale it in a meaningful way, to make a big dent with that cohort, we need to remove some of these barriers. So we partner with the Milken Institute, and really they spent a whole year diving into the challenges, the headwinds. They did one-on-one interviews, they hosted forums, they did market research, and really came out with 4 potential solutions, around potentially not just developing, but financing, developing, modeling different options. So those are everything from looking at things like social impact funds to one of the things that we know is happening right now is there is this sort of group of communities that are in a bit of distress given the current market environment, a number of different headwinds. And is there an opportunity, given some of these indicators right now, to repurpose some of those distressed assets into middle market options. So those are some of the key research findings. The other thing that I would say is I think we've gained awareness, Jennifer, that the middle market is not just one group. There really is this low middle, high middle, if you will. And the ability to hit each one of them, I think is a little different. And we know some groups really sort of carve out maybe more options for that middle or high middle. That low middle group is one that can be downwardly mobile. It's sort of like one crisis away from really being that low income group. So I would say that was just one of the other things as we've done a number of these case studies is acknowledging that middle income group is not just universal in the characteristics and traits that they have. So I think the solutions need to vary depending on where you're hitting that income spectrum.
Yeah, that's a really good point. And I will, we haven't talked about how do you define the middle market. We should probably just touch on that really quickly. And the definitions that I've seen are a range of area median income, right? So where and what is that range? Is it 30 to 60%?
I mean, generally 30 to 50. I've seen some other in the 50 to 75. So that's where it can vary. But generally, the annual median income is what often organizations use, which can be very specific to a certain area. What's an average median income in a Santa Barbara is going to be very different than in an upstate New York or somewhere else. So yeah, I think it's a local definition, if you will, but we find most organizations are trying to hit a certain price point. The other thing that I've seen used as a bit of a definition is to take a look at sort of the average market rate fees. So, okay, on average, this is what they are charging per month. We want to be this much below that, so hit a little different income group below that. So we've seen some approach it in that way as well.
Yeah, but I think the takeaway for listeners is just that when you look at how you define middle market, as Lisa mentioned, completely local, and it's going to depend on the cost of care in that area, the median income in that area, certainly the cost of housing. I was, when you said that you had partnered with the Harvard Joint Center on the dual burden of housing and care, and I thought, well, there you go. There's one of the most expensive housing markets, one of the most expensive care markets in the Boston area, right? And so, but I'm sure that their research wasn't tainted in that way. I was just thinking about that compared to other areas of the country. So whatever solutions we're thinking of, we need to make it hyperlocal, I would say, right? And then
absolutely,
you also brought up another really good point in that when you look at the seniors themselves, right, there's this distribution, low middle, or high middle, but also depending on their issues, right, they may, the issues that they have at the current time and the solutions for the care, right? So you mentioned we could bring in home care, we could maybe use assisted living, and we're going to have to be able to help folks do that comparison on a real-time basis as their needs are changing so that they can select the environment that's going to preserve their wealth for as long as possible or for the rest of their lives. So, yeah, there's not going to be a one-size-fits-all solution here. It's many, many layers of solutions, it sounds like.
Right. And we've seen this, and we've taken a look at all the different case studies that we've done on middle market, communities that have been developed and some that are in development. And everybody has a little different approach to it, sort of how they're going about it. And so it can be very unique, again, to the market. And the one thing that we've also observed, too, is many of these models are very dependent on some creative partnerships and community partnerships. So that may be everything from integration with a local PACE program or looking at volunteers, engaging that as part of a key part of the programming and the operations of it. So I think that that's important, and it's also those things assist with, the price points too. So when you're trying to really develop the middle market, all of the fancy bells and whistles really price you out of being able to offer certain things, at an affordable rate. So where can you maybe still offer some dining, maybe in partnership with some other area, organizations and agencies. So we've seen a lot of creativity. That being said, that's applauded, and I think in many instances is necessary, but that can be one of the barriers to scaling it too. So can you go and replicate that 15 times? Maybe not. Even those that are growing the most in the middle market, I would say they've got probably a core formula down, and then depending on where they are, they shift and pivot as needed to get to the ultimate offering that's going to work within a price point.
Yeah, very good point. Very good point. So we've seen organizations recognizing, this forgotten middle, and certainly as we go to conferences throughout the year, over the past couple of years, we've heard this message over and over again. And to your point, we've seen some really creative solutions. It seems like in the last couple of years, organizations with the interest rates so high, organizations have shifted from new development of possible senior living communities to meet this middle market need to looking more at those distressed assets and repurposing. Do you think that, I think it's going to be a combination, right, of brick and mortar strategies and community-based services, right? Give us some more perspective on that.
Yeah, so it's that housing versus care conversation too, which is really interesting. So just again, penciling out projects to make them work in this construction environment, even those organizations that have done it pretty well say it's a little bit of a challenge right now. So we know, that's, the construction prices. There's always the materials construction element of it, but construction wages and similar to what we're seeing on the caregiving side of things have been escalating, and that's a pressured area. And while some things may be stabilizing, we don't generally see a whole lot of prices come down.
Right.
So there are organizations that are pivoting and saying, okay, do we maybe do this through some acquisition? So there's, and that can be done a couple different ways. Yeah, there are some communities and properties that really, you're going to hit a ceiling with what price point you can charge for it. They may be some dated properties, some smaller units. The one thing that we do know too is there's a healthy number of what, the solo agers that are in that middle market. And so, is that a suitable, safe housing option for them? They have a slightly smaller unit. Again, they don't need all the bells and whistles. They don't have the ability to pay for all those bells and whistles. And you may be able to get some of those communities and properties at a better price point today than what you would have gotten several years ago. So because just some of the distress around the capital side of things. So I do think that will continue to play itself out. And we know a number of organizations that are having those conversations and seeing this as a sort of a bit of a silver lining to some of that distress. Can that open up some real opportunity for more middle market offerings for older adults?
Yeah. That's good to hear. Good to hear. And then I'm hearing also organizations that are saying not brick and mortar now, but instead we're focusing on building our home and community-based service continuum so that we're able to serve people no matter where they choose to live.
Right.
And
yeah.
Seeing that too.
I am a big fan of building out just sort of that continuum and that full sort of, not that you need to be the end all be all, because I think that can be a little overwhelming to some organizations, and particularly if you're like, I do this really well. I don't know that we know that well, but I think that there's huge value add to that, to having a comprehensive model. So even those that have the bricks and mortar, Jennifer, that also have services, they are bringing in a lot of those services to wrap around that middle market older adult that's in some of that housing. And what that's done, and this is a study I'd love to see done, it is because many of them anecdotally see it and feel it, that they are actually able to keep those people aging in place better and not needing to go to the nursing home. That's where things really get difficult. I think it's many would say it's a little easier. It's not easy, but a little easier to solve the middle market housing situation than the care side of things. I mean, because as you know, at the end of the day, if you need long-term skilled nursing, it is private pay or it is spend down to Medicaid.
Right.
And so that's a function of our system. So I think if you can keep people, focus on prevention, some of these wraparound services, maybe with some home care. I know a number of these middle market communities maybe have a little bit of a social worker sort of triage right there, connecting people to different agencies. I think that can really help with some upstream preventive stuff and support that aging in place.
Yeah. And I'll put in a little plug for something that I'm a big proponent of, which is continuing care at home programs. Especially if a provider's already in the CCR space, adding a CCAH program isn't a heavy lift, and it's another way to expand your mission without building brick and mortar, and to do it in a way, as you've just described, when you pair a wellness coordinator and help somebody navigate their wellness and their prevention as well as their health when they need it, you are going to delay services and reduce costs in the long term. And again, we see it. We don't do a great job of studying it and publishing it.
Right.
I'm hoping also that comes out too.
Right. Yeah, definitely of quantifying, I think, that the value for that. And, the continuing care at home program, they are laser focused on prevention, trying to identify any is so-and-so starting to decline. And, we haven't really mentioned technology at all, but I do think that plays a role. You always get into sort of who's paying for it, how are we paying for it, and so forth. But, where can we also start to, again, monitor on a regular basis and get people upstream before they have a fall, before, again, they need a higher acuity level of living. The other thing that I'm encouraged by I know the Medicare Advantage is a hot button for many providers just because they're not the friendliest on the reimbursement side of things. However, on the consumer side of things, they do continue to expand the bucket of what they're reimbursing for, and we see more and more of these social determinants of health fall into that. I think that is a big play for the middle market. Now, I know that, some of the numbers are still pretty low of how many, they may offer the benefit, how many are actually accessing it and receiving it. It's another conversation. But I think that at least shows that we're moving in the right direction. And so I'm encouraged by that because I think that's going to be a big part of keeping people healthy and aging in place wherever they call home. By focusing on some of those, social determinants of health.
I completely agree. I'm glad you brought that up because I actually also believe that in the not too distant future, Medicare Advantage plans are going to look to the senior living providers as excellent partners because of the work we do to keep people living independently, not needing care. If we're talking about CCRCs that have social workers or wellness coordinators or continuing care at home programs that do that, there's a number of things that we're advising our residents to do that make them have better outcomes. And I'm positive also have lower costs. Again, something else that needs to be studied, but we are going to make the best partners for Medicare Advantage. And I know some systems have already started to partner on the special needs plans. I think we're going to see that broaden in coming years.
I agree. And actually, we've got some information coming out on that very thing that we'll be unveiling at the spring conference, the first week of March, the next spring conference. So we've been trying to take a look at how can we measure that value of what we've known for many years and say, hey, this is what people look like, and how long they're living and maybe some health outcomes related to that of people that live in our settings versus their peers in the greater community, all else being equal, if you sort of match up against all of those other different characteristics. So we've got some information that a research study that we've done with NORC at the University of Chicago, again, our middle market partners. So we've been taking a look at frailty, healthcare access, longevity, and outcomes. So the longevity results will come out in March. So we'll have to come back and I'll update you on that. But it's pivotal because when you look at some of those things, you can start to tie dollars to some of that. And I think that, the providers really need to really convey their value. And when you look at the Medicare Advantage plans, they are seeing the benefits of our good work. And I think that needs to be rewarded. Mm-hmm.
Yeah, exactly. We're ready to participate on the reward side.
Right.
Maybe still a little risk adverse, but I think as an industry, we're working on that as well.
Yeah, we're making progress. There's some out there in that space, but it's complicated. Mm-hmm. So, again, to applaud many groups out there, they're doing it in partnership with others too. So yeah, when do we take the full risk and the upside and the downside? Right. So you need to have some scale and some understanding of it because it can get complicated.
For sure. So I think we've talked a lot about strategies to serve the middle market, but we know these, ultimately our basket of services needs to be affordable and accessible. Are there any other strategies we haven't talked about yet that you want to mention in terms of how best to serve the middle market?
I think we've covered, a lot of the key things that we take a look at. Okay. Again, I think, we're going to continue to sort of look at, hopefully maybe new financing models that come together and come to fruition. But I definitely see a commitment of groups really trying to focus on solving this in a meaningful way. So I think we covered all the key topics around that one.
Okay, perfect. So we're going to shift a little bit and talk about just growth in senior living in general. And I read an article you wrote recently called 5 Senior Housing Trends Shaping Growth in 2024. And you asked if 2024 is the year of the Great Reset. So tell us what you mean about that and how what encouragement are you giving senior living providers if indeed this is the year of the Great Reset?
Yeah, well, so that was my attempt at a crystal ball. So we will see what comes to fruition. It's always interesting to look back a year later. So, okay. So some of the reset is around, that's reflected around a lot of the sort of the capital position that we're in. So within 2024 and 2025, there's about 18 billion of senior housing loans that will come to maturity. And when you think about those loans, so these may be, bank loans, variable interest rates or whatever, they were taken out in a much, much lower interest rate environment in most cases. Mm-hmm. So now they're coming into, 2024, and we are in a much different borrowing rate environment. So the cost of capital is much higher. And even access to capital is a little more challenged. So we're coming out where it's, okay, we need to refinance this debt. And my gosh, it's going to cost us a lot more because now we're at this level of an interest rate. And you know what? The valuation's coming in lower for our community. Mm-hmm. And the loan to value requirements have changed with the banks. So it's a lot of the bank pressure, not solely that, but so there's this reset has been these organizations that are saying, okay, maybe can we kick this can down the road a little bit? And is this going to be a year of reconciliation or this recalibration where, okay, we might need to put in some upfront equity or take a haircut or just, figure this out. Mm-hmm. If we need to, again, extend some of this, the loan maturities with all these new conditions, and how do we do that and make that pencil out? So there's some pain element in that. But again, that could also be the next person's opportunity. So when we talk about some of the affiliation acquisition opportunities, I think that's where some of that lies in there. There's also been some organizations too, Jennifer, that have been sitting on the sidelines saying we probably need to maybe dispose of this community or sell it, but with expectations of prices up here, and the market was saying, no, the price is down here. Mm-hmm. And they said, okay, we're just going to sit till it gets back up here. And now I think there's a realization that the getting back up here is a little further out than what people thought. So that's that whole reset conversation. So I think, there's a lot of folks that are really trying to watch what the Federal Reserve's doing with interest rates. And, they've paused it. All indicators are that there will be some rate reduction in 2024, although some of the economic indicators are being a little stubborn with some of the inflationary statistics. So we will see, but it's interesting. So there's that happening, and we know that we've also been seeing this record levels of occupancy improvement, mm-hmm. record levels of absorption. So that's showing there's very strong demand. And this new construction is super low too. So it's like the transaction activity for affiliations, acquisitions is a little down because of some of that cash. And then new developments at record lows. That's both on the not-for-profit side and on the for-profit side. So when were we going to hit sort of this peak where there's just record levels of occupancy and demand, but the inventory and the supplies below what we need? So we already know that we're going to be in a major gap situation. We've projected out our colleagues at NICMAP Vision have looked at that, and how many, just to maintain our current penetration levels, how many new sort of senior housing communities will we need in the coming years? And there's going to be a significant gap. It's a really interesting dynamic at play right now, but we got to see some of this capital environment work its way through things, and hopefully in the second half of 2024, and once we get into 2025, things will look a little brighter on that front.
Yeah. Right before you left Ziegler, at the last Ziegler conference I attended last year, you and Dan Herman talked about mm-hmm. the fact that this development for senior living has kind of come to a screeching halt for the most part, right? That you weren't mm-hmm. seeing a lot of new starts, and understandable given the environment. Mm-hmm. So recognizing everything you just said, and the fact that, that was all through 2023, maybe most of 2024 may look the same. How, what should senior living providers be doing right now? Mm-hmm. we can't just sit on our hands. We know the gap is there and getting bigger, right? So what should we be doing? Is it planning? Is it looking at those distressed assets?
Yeah, no, I think it's definitely from a development side of things. I think it is absolutely getting in the ready position. And I think it depends on where your capital is coming from. Mm-hmm. There's certain areas that are pressured. Again, the bank environment's a little tight. But, on the for-profit side of things, the REITs definitely have a lot of what they call dry powder and cash. So I think they're going to be the fast growers, particularly probably from a transaction acquisition standpoint, but maybe some new development projects they'll get behind too. But and then the not-for-profits do have access to capital too, through some of the tax-exempt bond channels as well. It's just a little higher cost of capital. So, but we know that, on average, it takes a while for a project to come to fruition.
Mm-hmm.
So if you start it now, it's not going to open for a couple years yet. So, so we are, observing that people are maybe sitting on land or looking at certain properties and getting ready for sort of, once things start to free up, because I think once the capital environment sort of starts to repair itself and that access to capital or affordable capital starts to improve, we're going to see it open up pretty rapidly just because of some of the demand characteristics, which are unique to, it's such a unique thing to our sector that really any other sectors are not observing and seeing really in the mid or near term. Mm-hmm. So yeah, I think being in the ready position, taking a look at some of these, development plans, and that way, once you're ready to hit the go button, you can move fast.
Okay. So get in the ready position. Yeah.
It sounds so simple, right?
Well, yeah, it does. And being honest, we've been in the perfect storm for a couple of years, right? With, coming out of COVID, occupancy challenges,
right.
Return to that. Now we have staffing shortages and record rates of increases for our staffing. And, but I think the positive thing is the level of innovation and partnerships that we're seeing to solve these problems in the senior living industry is something I haven't seen in the 15 years that I've been in the industry.
Right. Right. I agree. I think the difficulty of the last couple of years has really fostered some, additional creativity and the pace of creativity that we hadn't seen before.
Yeah, I love it. So I do a lot of governance work, and I know you tend to work with board members as well. And, we just talked about the perfect storm, and I still think that there is some risk adversity, but also the reticence to deal with some negative financial trends on an urgent basis, right? Before we end up breaking covenants and having to look for, to be acquired or look for partners in a negative situation, right? So what lessons can we learn from these organizations that have been able to see early warning signs and let's spin it to the positive, right? What do you see boards doing well as it relates to this?
Yeah. Gosh, you and I could talk about this one for a long time. So I think the boards vary in their understanding, their sophistication, and their acknowledgement. So I would argue that many of those organizations that have waited too long and gotten into trouble knew it for a very long time and just either stuck their head in the sand or didn't understand the difference between maybe a little bit of a bumpy road and a downward spiral. And there is very little wiggle room in today's environment. It is increasingly a very complex business. And I think there are often some very well-intentioned board members that are not fully maybe educated on the industry and the trends and what's happening. And they don't move quick enough. They are reluctant to make some really hard decisions. And at the end of the day, we've both seen them where there's no longer a mission because the doors have closed or, whatever it may be. So, and again, there are fantastic organizations that have had to make the decision to sell or to close their particular community. We know there's many of the multi-sites that have done that. So it's not just the single site community that, waits too long and needs to sell or whatever it might be. So it's that tension between the mission and the business acumen of it. And I think, it's not just the no margin, no mission. It's how much mission can you afford? So, and if that is running you into the ground, you can only sustain losses for so long. So, and there's no shame in seeking a partner. That is continuity of mission. I think that is you doing your job as a board member. So I think we need to educate the boards, keep them on top of things everybody's in a little different place on the risk scale, as you mentioned,
Mm-hmm.
but they need to be confident in making the decisions that's in the right interest of the organization long term, for sustainability. And yeah, it's identifying when there might be some red flags that they need to get on pretty quickly.
Yeah. You brought up a number of issues, but I love the board education angle because it is really important. It's hard to find good board members. Let's just start there.
It
Then
is.
we have to bring
It
them
is.
on and share with them all the complexities of working in this environment. And what I love is, NIC conferences, Ziegler conferences. I mean, there are opportunities where you can bring your board members,
Absolutely.
maybe not all of them, maybe a select few, but also make sure that those topics are coming to the board meetings to get everybody educated on an ongoing basis on these trends so that your board can be part of that conversation.
Right. And I agree. And I think that responsibility lies on the shoulders of the CEO or the executive director, to bring that to them. I think sometimes that doesn't always happen. And yeah, it's hard. Many of these board members are working individuals. So to get them to travel to a conference can be tough, or even to log on for a 2-hour webinar during the middle of the workday can be difficult. But that board education is so, so important. And I think should be a big part of board meetings. And people can read packets, hopefully they are, and read advanced approval of certain things and committee meeting updates. But I think devoting time through a board retreat, or if it's even just a quick 30 minutes of every board meeting or something like that, to some type of education or hot topic, I think is really a big key to success and a differentiator I see of sophisticated, aware, astute boards, and those that are just not tuned into the world around them.
Yeah. I read in a book recently on governance. Yes, I read books on governance. That's scary, but learning a lot about best practices, and many organizations don't think about their governance as a competitive advantage, but it truly is. And the parting message I guess I would have for leaders who are listening on this is, when was the last time your bylaws were reviewed, and is your board operating as effectively as it can? And, do you, if you don't have term limits, do you have a great assessment process to make sure that you have the right people on the seats on the governance bus of your organization?
Right.
And,
Right.
Are you having those hard conversations? Because it's the willingness to have the hard discussions and make those hard decisions, sometimes around mission-based programs, that is going to save the organization and allow it to thrive into the future.
I agree.
I'm off my soapbox. What would you like to add to that?
No, I mean, hallelujah, amen. I'm with you on that one. So yeah, I think there are some best practices out there. So I don't think it's I'll say incredibly complicated. It is hard to recruit board members. It's a big ask, and it does take a little while for somebody new to the industry to get up to speed. It's a little fragmented and it's complicated. What's a CCRC versus a nursing home versus a memory care and assisted living? And it's just that can get a little complicated. But I do think sometimes we don't get some of the basics with the governance standpoint. But I think the term limits is a big one. I've seen some groups that don't have them that effectively function. But I think that you run the risk of limiting new ideas, fresh perspective, some of that energy that will propel you into the future, if you don't.
Yeah, I agree. Perfect. Well, we didn't plan this question, but I'm going to ask it anyway.
Okay, go for it.
In terms of Nick for 2024, what big things are on the horizon for you in terms of research? What are you excited about? I know you mentioned some's coming out at the March conference, but if somebody listens to this after the March conference, tell us where we can learn more and what we should look forward to.
Yeah. So, one of the biggest ways, honestly, outside of attending our events is to stay on top of our research and information and reports and white papers and case studies and webinars is we've got a newsletter that comes out every 2 weeks. People can sign up on that for free on our website. It's the Nick Insider. So paying attention to all that, we often post things on LinkedIn as well. So we do have that NORC sponsored research on the longevity information. And then in conjunction with our May data analytics conference, we will be releasing similar results for health outcomes. So we've got some of the exciting things on that. We're continuing to push through some potential solutions for the milk in middle market. We're going to continue to stay on top of the capital markets environment and bring forth, additional webinars and thought leadership on that piece. The case studies are a big thing for us as well. The thing I'll just mention, and this is going to drive a lot of our research agenda moving forward, is the 5 areas that are part of NIC's strategic plan. Focus areas, age tech is one of them. Active adult, so that's sort of that active adult rentals, 55 plus growing segment of the senior housing market. We've got the middle market. We're going to continue to be committed to that. We have partnering for health, which that gets into all of that Medicare Advantage and value-based care stuff that we were talking about. And then capital for operations, which takes a look at the unique sort of structure of, particularly on from the private sector of owner and capital provider being 2 different organizations and some of the best structures there. So you're going to continue to see more from that. We're probably going to be doing some deep dives to better understand, again, how can you quantify some of that value for seniors housing? Also some additional analytics around some of that distressed asset group, sort of that group at the bottom, and better understanding some of the profiles and what they look like in the trajectory. So we're going to have a lot of things coming together. We've got a research committee that's kicking off on March 4th that we will work with them to really set our agenda and prioritize all of these incoming hot topics and how we can best deliver that back out to the market.
Perfect. Well, it just occurred to me that one of the easiest ways to help educate your board is to get them signed up on the NIC Insider mailing list.
Absolutely. Yeah. I mean, again, I know it can be overwhelming with all the information out there, but, get them on those distribution lists and let them read some of that. And yeah, you can always do some recommended readings. I think that's a good thing to assign to boards and pulls from some of these research pieces and articles and say, what's this mean for us?
Perfect. So, Lisa, and tell our listeners, if you would, how they can get a hold of you or connect with you.
So you can go on the NIC website, nic.org, so nic.org. You can find me on there, my contact information. I'm on LinkedIn regularly, so they can always reach out to me there and be glad to connect. So
Perfect.
I'm out and about. We're here to be a resource, and people often say, where can I find this, or how do I access this report? And whether it's myself or one of our other colleagues, we've got a great research staff that I'd be glad to connect people with as well, because they've got subject matter expertise in various areas. So we're here. We're here to serve and give some great data and information to help everybody do their job a little bit better.
Thanks so much. And we'll put all those links in the show notes underneath so that
Perfect.
Anybody can access that. I'm Jennifer Drago, and you've been listening to Senior Living Visionaries podcast, where we explore cutting-edge ideas and breakthroughs that are shaping the future of the senior living industry. Please subscribe to be notified each time an episode drops at seniorlivingvisionaries.com. Thanks so much for listening, and we'll see you next time.
You've been listening to the Senior Living Visionaries podcast and radio show, where we showcase the leaders and innovators in the industry who are pushing the boundaries and setting the stage for the future in senior living and services. Join us next time as we share the bold ideas and breakthroughs of the industry's most forward-thinking leaders here on Senior Living Visionaries.